SABC News celebrates Women's Month.
Nedbank has reported a 27% uptick in headline earnings for the first half of the year. This was due to a much better performance from Ecobank, which Nedbank has a stake in. The rest of its Africa operations also grew by 59%. Arabile Gumede sat down with Nedbank Chief Financial Officer Raisibe Morathi to chat about the bank's performance.
Raisibe, thank you so much for the time. Of course, you've had an interesting time, of course, in the last interim period. Ecobank in itself serving a large boost to your earnings. Would you say that that was a crux element to your earnings picture in this interim period?
Thanks, Arabile. The ETI numbers are actually, a reflection and correction of the big losses that we saw last year. So last year, this time around, it was a big negative of 1 billion rands, and this time around the correction has actually created a swing where our earnings are looking fairly strong at 27%. However, we do point to the fact that the business that is basically originated outside of ETI, the managed operations, is up 2%, also from a strong base of last year. So the split earnings has been provided purely to afford the market better analytics and comprehension of our numbers. So going forward, you'll see one line that we're showing. But certainly we are very pleased that ETI has actually turned around. We think the worst is behind us, and the improvement in their performance is partly to do with an improvement in the macros in Nigeria, and secondly, a great effort that the management of ETI has put across in terms of turning around the business, focusing on revenue lines and diversifying their revenue mix, and focusing on transactional activity.
And what about expansion? If you're looking to perhaps get any bigger than you are right now, are there any thoughts around where exactly you're going to do that, and how much have you put forward for it?
Our capex is around 2.3 billion rands, and this is where we invest in a whole lot of digital platforms to support our clients to move into more of the digital age, to be able to transact from their lounges from everywhere where they are. And that investment is supporting our retail business largely. And then as we are developing new products, we also leverage on that and support our businesses in the rest of Africa, in SADC. So we have seen the likes of mobile banking that is taking some gaining momentum in the rest of Africa. The mobile app that we launched in South Africa has been really supportive of allowing our clients that transitioning to digital platforms. So 1 million clients have signed up, and we are looking forward to many more out of our 8 million clients beginning to translate their banking into the mobile app.
And with regards to VBS, of course, that has been something that you were sort of sprung up upon and sort of put into in charge of for a little bit as well. How has that affected your business? Have you had any liquidity fears? And how has it helped you in any way as well?
VBS has actually been a very positive thing for Nedbank because the Reserve Bank requested us to be the platform where the clients who were stranded with their deposits locked in VBS could then be accessible. So what literally had to happen was for us to open accounts for 17,000 clients who were stranded, and for them to then be able to come and validate their accounts and begin to transact out of Nedbank. So what they pushed in our direction was deposits, but we obviously hope to translate more of those clients to do more banking with us. So definitely a positive thing. It is not an inconvenience at all, and we are seeing quite a strong traction where many of those clients have confirmed their balances and stayed with us, so they haven't really moved their money elsewhere.
And for the remainder of the year, do you see yourselves growing beyond this point? Do you see yourself seeing the same earnings picture at the end of the full year?
The first half is somewhat partly inflated by ETI swing, and we expect that for the rest of the year, whilst ETI will still be a strong contributor in our earnings, unlikely that we'll see growth at similar levels of 27% or 26% of DHEPS. Our guidance is to be somewhere roughly above a nominal GDP plus 5%, so around early teens, as opposed to the number that we have seen, and this is really as a result of ETI. But what it means is that we expect that our managed operations will probably perform a little stronger than the 2% that we saw in the first half.
Raisibe Morathi, CFO of Nedbank, thank you so much for your time.
Let's take a look at how African markets and currencies are performing. Thanks so much for joining.